wondering how people are still closing on houses when rates are constantly climbing up? Well, it's called buy down mortgages. And if you don't know about it, you need to stick around. Buying down a mortgage rate typically involves paying an upfront fee to your lender, those are known as points, in exchange for a lower interest rate. First, we're going to see if actually buying down a mortgage is the right choice for you. So what you're going to do is you're going to calculate the total cost of the points and compare it to the total cost that you would save in interest over the life of the loan. I'm going to do a quick explanation of points because you're probably like, what is a point? Well, when I say points, I'm referring to discount points. Okay, so quickly, 1 point does not mean 1% of a mortgage interest rate. So let's, for example, we have 4%. That's our rate, right? Which is pretty good in this atmosphere. But let's just say we have 4% and I want to pay 1 discount point. That 1 discount point is actually equal to 1/4%. So my 4% interest rate will get knocked down to 3.75%. So if I have a $300,000 mortgage loan and I want to pay 1 point, well, that 1 point is 1% of that. So that's $3,000. That $3,000 helps me get my 4% interest rate to 3.75%, if that makes any sense. If this doesn't make any sense to you, keep watching other videos. I may have explained it correctly. I may have not. I may have confused you. Right off the bat, if you already know you don't have that type of cash lying around, that's okay because there's something called seller concessions. So if you haven't seen my seller concession video, hop over to that after this video and it'll explain how you can do mortgage buy downs with seller concessions. The next thing to do is find a lender. You want to find a lender that actually offers these buy downs. Then you're going to compare their rates, their fees, and their terms to find the best deal for you. Another thing, when you're checking the terms, make sure that the terms are the full life of the loan, or maybe it's just temporary. Make sure that that is clearly expressed to you. Next step is to actually get pre-approved. Make sure you're submitting all your documents to your lender so that you can start actually shopping for a house. All right. And then once you're approved, you can start the negotiations with the lender to see how much you can pay down your mortgage rates. If that lender does agree to exchange the points for cash to lower that interest rate, you're going to need that money at closing. So make sure that you actually have that money to buy down that rate, or you're able to get those funds by that time. So it's best to do your research. Make sure that if you want to buy down your mortgage rate, make sure that you understand how those points work. Always speak to a lender about mortgage rates and mortgages. This may not be the time for you to buy. That doesn't mean that you don't need to still save your money. So still be at it. If you are interested in any down payment assistance programs, there is a link in the description box. If you have any questions, please feel free to reach out to me. I am a resource, so please call me, text me, email me, whatever you need, and I'll do my best to help you out. I'll see you guys in the next one.